T is here and welcome back. Now, every entrepreneur wants to own a successful and profitable business, but it is not always clear on how to get there. Now, remember, building a successful business is a marathon, it is not a sprint. However, if you want your small business to be more profitable than ever before, the key is you must develop goals on where you want your business to go. And your goals also have to be supported with a budget and financial statements. And then your budget and financial statements need to include some type of financial analysis. And the more financial analysis you put into it, and the more thought you put into it, the more likelihood you will accomplish your goals. Now, from my experience in talking with many small business owners, the biggest challenge with operating a business is cash flow, especially during this COVID. And the financial health of your business is summarized by the income statement, the cash flow projection, and the balance sheet. And the information contained in your financial statements can determine ways to make your business more profitable, either by you increasing sales or even where to cut expenses. But if you want your business to be more successful, you also need a plan and an overall business vision on how to get there. So here's my big takeaway that I want you to get. Success is not given, of course. And if you want your small business to be successful this year, you need to make the necessary changes to bring that about. You want to start thinking about where you are today and then start unpeeling your vision on what is working for you now and what is not working for you so you can shift focus a little bit going forward. Now, in this video series, we're going to help you with that by giving you the tools that will help you focus on your goals to bring about the change needed. And then Ray will also start walking you through the financial aspects to get you to where you would like your business to go this year. So, entrepreneurs, let's get to work and start drafting your 2021 goals if you have not. If you have, congratulations. But now you want to start linking your 2021 goals to a financial plan. Are you ready to get started in making this year the best year yet? So I'm ready to get started. Let's get started, Ray.
So today is an extension of our last micro course on goals and budgeting. And in the last micro course, we talked about establishing your starting point, evaluating where you're at, um, as measured against your finances, as well as your vision for your business. So this time we dig a little bit deeper into the finances and the vision that you analyzed last time, and start to set some perspective on where you'd like to go for this coming year. And a great way to do that when it comes to the financials is to dig into those numbers and try to unfold some of the story of what those numbers are telling you. And we'll walk through an exercise to do that. And then the same thing with the vision. You dig into the vision items that you talked about that were important to you that maybe you either didn't accomplish or would like to accomplish or did, and unfold those a little bit as well and find out exactly where you should be focusing going forward. So here's the financial statement. I'm going to highlight a couple areas as I go through. There's I like to start with the revenue number because that's a important first step in establishing all the other things in the financials that you'd like to do. So from a revenue perspective, where are you? You looked at this last week and just kind of put the number in from last year. And now you have to ask yourself some questions. First is, did this hit my expectations? If it did hit your expectations, you need to determine why that happened. If it did not hit your expectations, you also need to determine why that happened. It's a little bit of trying to unfold the story of what that number's telling you. When it comes to revenue, it's usually a matter of sales and service. Sales would be, so let's say that you did hit the mark. Well, where did you hit the mark? Did you bring in new clients? Is that what was the revenue driver? Or did you retain clients that you currently had? This part is just about kind of breaking it down between sales and service, because service is the thing in your business that allows you to maintain clients and keep them from going somewhere else, as well as expand that relationship and do more for that client. So that I put that in the service bucket. And then the sales bucket is, I like to look at new clients. So then we take and we break down the sales bucket of it. And if in fact you hit your revenue and you hit it because you determine you hit it because you brought in new clients. All right, now it's a matter of saying, yep, I did my sales job really well. List out why you did that. And for example, when I do a good job in sales, I usually know it's because I was able to get in front of the clients I wanted to. I had a good message that was hitting the mark with clients. But list off those things that have gone really well to contribute to that. If not so well, I wasn't able to bring in new clients, I usually know it's because I was not able to spend enough time doing those sales activities. Or maybe I got in front of enough prospects, but my message wasn't coherent or good enough to guide them into making the purchase. But here's just about isolating that, because then at the end of this micro course, you're going to take and say, okay, here's where I maybe didn't do so well, but I'd like to build upon and do better. And then you'll have more concrete steps to that, or maybe at least a more of a concrete area of focus. So just to simplify that, revenue, I did really well in revenue. And I isolated it, my clients that I had maybe stayed, and I was able to attract new clients. Where was I able to attract new clients? What was going well with that? Well, my time and efforts were paying off, and my message was really good. So that would be some things that you're going to isolate that you can build upon and protect in the future. Let's flip this over and say maybe revenue didn't go so well. Why was that? Well, I had a bunch of runoff. Most of the clients that I expected to stay around did not. Okay, let's isolate that now. If clients were leaving, it's because I probably wasn't servicing them well or delivering what I said I was going to. Well then, what's the reason for that? Time. Typically it's going to be I wasn't able to spend the time to do that. If that's my strength and my talent, and I was not able to spend the time delivering the product or service I said I was going to at the quality I said I was going to, or follow up with simple questions, there's a problem. There's what I'm going to isolate, in that I need to be able to spend more time. And to give you an idea of where this is going to go, next week we're going to talk about key inputs. So this is going to go from, my issue is I'm losing clients because I'm not able to provide the service I said I was going to, and I'm not able to keep on top of questions and provide them the great client experience I would like to. Okay, what do I need to input into my business to get that done? Well, maybe I'm spending too much time on administrative tasks, so I need to find some software that will help me with that, or another employee that will help me with that, or I need to outsource something to help me with that. That's where the key inputs are going to go next week. So I just want to give you an overview of where this is driving to. But this week is just about, from a financial perspective, unfolding those numbers and figuring out exactly what's behind them. It's the story behind the numbers. There's a lot of different directions this could take from here with each business situation, but this is where you start. You take that number, unpeel the layers a little bit, and figure out what attributed to that number, good or bad. And that's how you analyze revenue. And I'm just going to hit a couple of other key metrics, because you can do the same with almost every line item on your financials. Expenses, because that's typically another important area of the income statement. And the three most important things I like to look at are revenue, expenses, and net income. So in terms of expenses, do the same thing. Unfold this a little bit. What percentage of my revenue were my expenses? Now, if you've able to reconstruct last year's and compare to last year, you can see, did that number go up or down? That tells you something. I spent more money to get the same revenue, or I was able to spend less in expenses to get the same revenue. I became more efficient. What story does that tell, though? And then, just line item. What line item is the biggest part of my expense? Well, Typically, if you have employees, it's going to be employees, possibly advertising. So, look at the employee line, that's 20% of my revenue. Is there anything I can do there to make that more efficient? Am I maximizing my employees? Because an employee can, they're an expense, but also they should be driving revenue in some way, whether it's directly or indirectly. They're either freeing up your time so you can go drive revenue, or they're directly driving revenue. So there's some analysis that can be done there. And as we start to look at what you would like to do to grow your business, this is going to be an area of input that you possibly have to expand on in order to get more revenue. So you can take the different line items, just analyze them in the same way. Advertising, spend $15,000 on advertising, that's 8% of my revenue. That's a significant portion. It's not as significant as the employees, but am I getting the return on advertising that I expect to? And that's something that is going to vary widely, so I can't give a lot of great examples, but you need to drill down in that and determine if, is there a way to track my advertising to see if it's bringing clients in the door? Are my efforts working? Should I increase this area so that I can increase revenue even more? Should I reevaluate because it's not giving me the bang for my buck I expect it to? So unpeel some of the layers in the expenses. And then with net income, the important thing here is just to see what percentage of my revenue is turned into net income, because that's an area that you can build upon. And a lot of times it's the net income that you want to grow. You do it by growing revenue, managing expenses, etc. But it's the net income number at the end of the day that you want to get bigger. And here it's kind of fun to say, all right, here's my net income as of today. What if I add another 20,000 in revenue? Go type it in and see what it does to your net income. Assuming you don't change your expense recipe at all, you just don't change any of the rest of the elements of the income statement. Simply increase my revenue by 20,000 or 25,000. I hit 3 of the main metrics on the income statement. Unfold those a little bit, learn what the story is behind them, and as we progress through this process, those are going to be areas that you're going to manipulate to see what the cause and effect is. If I raise my revenue, what does it do to the bottom line? If I need to bring on new expenses in order to increase revenue, how much revenue do I need to cover a new employee or a new advertising campaign, whatever it may be. You'll be able to play with some numbers and just see cause and effect here. And then I jump over to the cash flow statement and do a little bit of the same. I'm going to eliminate a couple of the numbers here just to simplify it, and that focus on that first category of cash flow from operations. As you can see, the cash flow directly comes from net income, and then a couple of things come in and out. Depreciation is added back in. That's why the cash flow from operations total is different than the net income. If you don't have depreciation, zero it out, and your net income should match your cash flow from operations. So there's a source of cash for your business, and going to be the primary source. And obviously the area that you're going to want to focus on the most is that income statement, because you can drive that revenue number all the way down to the net income number. Cash flow from investing I like to include because as you start to enter key inputs, you may be investing in things in your business like new equipment, or other things that you're going to invest in. So that'll be a use of cash, hopefully, as you grow, and you'll start to pour more money into that category. I put a couple numbers in just so you can see some, again, cause and effect. But as you start to move into the key inputs in the coming videos, you'll probably have some things that you're going to need to input into your business if you're an asset-driven business that purchases assets to drive revenue. And then cash flow from financing is very likely to be an item that you're going to use in your business, because we talk here about capital in from owners. Last year's a year where potentially you had to put more capital into your business, and that can be through yourself or other investors or other individuals that are going to have some sort of ownership in the business. And then your owner's draw, which is hopefully a positive big number. This is the one you want to be, this is your income as a business owner. And then some financing activities, such as loans in and loans out. As we progress into key inputs, it's possible you're going to need to borrow some money. So, this is going to be an area that you're going to use as a source of cash. And then as you borrow money and pay it back, it becomes a use of cash. So just focusing on a couple of key elements here, really want to hone in on that. owner's draw, because that's something that as you progress and make your goals, you're probably going to want to make bigger. You know, you started a for-profit business to create an income for you and your family, and that's the number that is going to determine your income. So if I want to take and make that 100,000, what do I have to do in terms of revenue to do that? And you can manipulate the numbers then and say, all right, in order to get a $100,000 draw to balance out, based on my cash flow, what do I have to do to revenue? And then, you know, taking that owner's draw and getting it to where you want to get it, what do you have to do? Do you have to add more employees? Do you have to add more investing activities? And that'll come in the key inputs. But here I want you to take away, what are your goals going to be? And the goal is likely going to be, you know, I want to increase my owner's draw. Well, that means you need to increase your net income. You increase net income by either increasing revenue or decreasing expenses or some mixture thereof. Sometimes you have to increase your expenses in order to increase revenue. So what does that look like? If I have to add $20,000 an employee, or, you know, $20,000 of outsourcing, or, you know, whatever it be, start inputting some numbers and seeing a little bit of the cause and effect here. Because then once you're done with this and you've played around, you're going to want to focus on that ending cash. And I have an excess cash cell in the spreadsheet so that you can see, you know, what's left over after I do all the things I'm going to do with my business, what's left over at the end of the day. But the point would be to try to manipulate it so that the cash flow stays where you want it. So then out of this, you're going to establish a few things that you'd like to accomplish going forward. You know, if you want to accomplish a bigger owner's draw, you can input some numbers to determine how that's going to be. You know, here's how much I need to increase my revenue in order to get to that. How am I going to increase my revenue? Well, when you unpeeled the revenue, you determine that, you know, you have a couple elements. You have sales and service that you need to focus on. Where are the shortfalls now that you need to focus on? Or where are the really bright spots that you need to protect as you go forward and continue to build upon? All right, so that's how we do the financials. And you look at the end of this, you just come out with a couple of things that you'd like to target. I'd like to target revenue increase of 50,000. I'd like to decrease my expenses by X amount. I would like to, at the end of the day, have a owner's draw of 100,000 versus 75,000. So now you have a couple of concrete things that you've taken out of the financials that you'd like to accomplish. That wraps up the financial aspect of this. Once you've done the financial overview, now we go into the vision aspects. So, you know, in terms of vision, the things that we highlighted last time were, you know, I'm spending too much time in my business, and I'm not able to accomplish the income I expected to. I'm having a real struggle finding the right people to work with me. So now, okay, those are some vision aspects that maybe fell short. But nonetheless, you go through and start unpeeling the layers again on the things in your vision that you identified as either have hit the mark or didn't quite hit the mark. And peel back what you can do to start solving that, because the solution is what you're going to want to focus on in the year to come. Let's say it's that I'm spending too much time in my business. All right, well, why is that? Unlayer that a little bit and say, all right, what am I doing with my day that's you know, creating it so that I can't get away and I can't have any relaxation like I envisioned when I started this. You know, I envisioned this freedom of being a business owner, and now I'm tied to it, and it's not quite hitting what I wanted. Well, what elements do you need so that you can have more time and get away from your business? One of the things I find is when you feel like you're spending too much time doing something, it's because you're probably inefficient at doing whatever tasks that are taking up all your time. You're probably inefficient at those. And it's probably because they're not at all in your zone of genius. I know for sure, if I can be set free to talk to clients, have client meetings, I'm gonna have energy and I could do it all day long and be excited about it. Someone puts a stack of paper in front of me and says, fill all these out. It will take me hours beyond what it should. I'll be drained and I will not be at all in my zone of genius and what's making me energized. So identify those things. And if it's a matter of time, then identify the things that are draining your time and look to maybe make a solution to make that better. And it's going to tie into the financials too. You know, I'm not having time to go out and do the selling I want to do, so I'm not getting the revenue I want. Well, because I'm bogged down doing paperwork. Okay. As a financial aspect, we said, well, we need to backfill that with maybe an employee or an outsource or some technology. Same thing here. I need to find a solution for someone to take the slack up where I'm really struggling. So maybe from a vision perspective, I'm going to add some help. I'm going to take off one of the hats that I'm wearing. So just peeling back those different layers of where your vision is either thriving or where you're finding some shortfalls, and come up with a few concrete steps that you can take this coming year to make that better. Other examples might have been, I expected to have expanded geographically or to have reached more clients. Or maybe I'm getting off the mark overall of what I wanted to do with my business. This is the time to peel back the why that is and come up with some opportunities to solve that misalignment, or to realign that misalignment. So from here, we take those things that you decide to key in on for the coming year, and when we go to look at what the key inputs are going to be, we start putting again the numbers behind them, as well as the concrete action steps you need to take.